Looking at the NASDAQ contract today, it was where you can see there's a possible position we already stationed over here. We're gonna talk about it in a minute. But before that, I want to talk about a very sensitive topic, is basically what not to do when you trade. A lot of time that we act out of the inertia to get into the market, not to miss a position, God forbid, and we acting irresponsibly with our risk management and just jumping into a trade, hopefully to catch the wave, or to catch the trade is not going to slip away from our fingers. So I'm going to use this specific contract just to talk about what to do and maybe what not to do. As always, as a disclaimer, this is not substitution for financial advice. You should always consult with your financial advisor. This is just a trading idea. So let's talk about the specific pattern that we see. And we know already from two and a half weeks ago, we talked about it in our previous videos, where basically we see a pattern which is drop, base, drop, base, drop, etc. Basically, as we said, as always, every time that the graph creates a new base and drop, it creates a new supply areas in this matter. And of course, we're talking at NASDAQ as a general way. We see how the NASDAQ basically comes from major demand, and obviously, and as we saw it previously before, we know then when the price reaches from a major area, is going to try to achieve to get to the next major area. Basically, from if we came from major demand, it's going to try to reach to the major supply and move forward with the trend. So right now we're in a short mind position because we did not see the last highs being break. Currently the price sits in the supply area. Of course, when in the supply area, our mindset will be on to only short position it. So we see the trend is still, according to the day interval, is not changed. We just got into the pool right now. We see this candle right now, right here, represented of this red stick right here, red candle right here, get inside into this pool area. This pool area basically represent a possible area when we're gonna see a flip of hands. Means that buyer's force is slowing down, and now sellers getting into the picture. That's why we have a struggle over here between the sellers and the buyers, is representing this almost flipped hammer / doji candle. And in order for us to take a short position in the day interval, we have to wait additional day to make sure that the next candle will basically cross this candle right here in order for us to get to a short position. So right now, by the day interval, we're not going to act to a short position. We're going to go to the 4 hours chart, and I want to show you how does it look in the 4 hours chart. So this is the price that basically react 2 times to the major demand. We see how the price basically do his moves, created dropping from here, created get into the demand area 1 time, 2nd time, then reach the minor supply area. The sellers trying to get to call it decrease the price again, trying to bring it back into the demand area again with no success. And we see the buyers still got into the picture 1 more time, and same goes as the sellers trying to take the price down, and with no success. Now the buyers still very much into the picture. We are in this point right here that we can see that the buyers are still in the market and take control in the market, but we in this area right now that we have to either decide either to act and how to act. So if we're in a supply area, we're only going to short position it, but we have to get supportive volume in order for us to get a firm decision. We can see the volume is not matching the result, meaning there's no high volume in order for us to take this short position. Means that if we keep in mind that we come from a major demand area and the price will try to reach to the next major area, which is the major supply right here. So there is a very strong chance that the price will break this area right here and gonna try to achieve and reach up all the way up to here. So now we just have to decide whether if we are taking a short position because we're in the supply area, or waiting and sitting down to see how the price reacts. Maybe it's gonna not gonna give us confirmation candle, just gonna try to bridge this pool, landing on this pool one more time. In this meta, it's gonna happen like this, and land on the pool one more time, and basically gonna try to achieve to reach to the major area, supply area right here. So as the 4 hours chart did not finish, 4 hours interval did not finish, we have still 43 minutes in order for us to finish this interval to see if we have a confirmation. A confirmation basically is this candle should reflect to us a full candle. They're gonna pass this green candle over here in order for us to take a short position. So we still in a mindset of a short position because we still see the trend is not being break. It's still a short position, but we have to keep in mind that we're coming from a major demand area. So there's a very high chance that the price will basically make all the correction right here and go up. So what do we do and what don't we do? If we're not certain about how to trade this position, of course, don't trade it. There's a different contract that you can deal. There's coins, there's commodities that you can trade. Do not get into position out of rush. Let's try to take the opportunity within the day. We're talking about the 15 minutes interval to see what possible positions we have. So within the 15 minutes, we see how this price that was reflecting a couple candles in the 4-hour interval shows in the 15 minutes interval. We can also see, I'm gonna go back one more time to the 4 hours interval. I want to show you one more thing, and we can see with this in this line right here, we see how this tip of this candle reached basically to this the previous candle. Basically, we can see that it touched it, it tipped this candle, and now we started to flip and reverse as it should in the supply areas. So why am I showing you this? This is basically the area where we would short position it in order for us to get to a short position. So going back to the 15 minutes interval and using this line that we just marked, which is basically correspond to the candle we saw before. In order for us to get to a short position, we can see it very clearly over here as well. We can mark another pool over here in the 50 minutes interval, and we would take a short position the second time that the price reaches over here. As we can see, the price reaches over one time, second time, and very even small time, third time. To get to started is short position it. Will I be able to take a long position? Let's try to do something more advanced and think about how we would do a long position, and if we want to do a long position. I'm gonna look first on the market profile, and this is the day profile, the previous day profile, and we can see it's a P shape. We can see clearly it's like a P shape. We have a P shape over here, and we see this tip right here of the day profile. I'm gonna narrow it down for you guys. We can see this tip is very short tip. And what does it mean? It means that if there is a short tip over here, it means that the likability for the price to go and rise up is still very much high. It means that the graph or the price still did not finish to expand. There's a high likability that the price would actually go right now and go up in order to try to achieve, as we said before, to reach to the next major area, the supply area on the top. So we have to take all the variance in when we get to a position. So of course, when we're in a supply area, we're not gonna favorite the long position. Of course, when we get into this such a big supply, we're still gonna try to think about how to short position it. But if I understand there's a high likability that the price will actually going to complete the move in order for it to get to the next major area. If you're in a call it more advanced and you think that you calculate the risk completely, even in this area you can long position it, although it's highly not recommended. And let's see how it does work. We can mark another pool over here in the 50 minutes pool, it's a demand pool, and we can see how it's correspond also to the low value area. And we can see over here how there's a fight between the sellers and the buyers. And we can see the tip over here, and also gonna reflect it in the night profile. This is the in blue. We can see the night profile. I'm going to expand it as well in order for us to see it as well. So even in the night profile, we can see some kind of a double distribution day, and we can see how still the price lands on the low value area of the previous day. This is the low value area of a previous day, which is also the 15 minutes demand there, demand pool. This is the red line right here represent the low value area of the night. It means that the price decided that it's not going to be fair to trade it in this area, so therefore it went down to this area. But we can still see how the price is being traded in the previous day a range. So we're still in the range. We still did not get out of this previous day range. It means that in all in total, the sellers and buyers decided that this area right here is basically a fair area to trade. So I need to understand now what to do. Should I take a long position from here to up, or maybe I should wait for him to go down? So if you're not certain about what you're doing, the idea is do not trade. You don't have to trade this position, not this contract, and not have to rush nowhere. As I said before, there's a lot of other contracts that you can trade in order for you to get to a position. But if you want to understand the story correctly, in order for us to move and to take an action, we have to take all the variance in calculation. So taking, I'm gonna again just quickly review that this short tip over here, that we said if we have a short tip, that the high likability to the price to expand, and also we have to keep in mind we came from a major demand area, so there's high likability for the area to expand. So I mean, there is a possibility for a long position. If I would take a long position, it would be in the 15 minutes interval, basically get into position right here and trading this range at least to the day range, basically risking about $680 in order to create $4,855 as the first contract. Of course, my understand my base assumption is even it can go higher and higher and higher if I'm taking the long position. But if we just want to play it safe as we said, we're taking about all the way to the high value area of the previous day. If we don't want to do it, if we don't want to go against the trend, and we basically want a short position, and because we still have to keep in mind that we are in a supply area, and in the supply area, what I want to see is basically get confirmation from basically a higher interval time. So I would also look at, I'm going to jump to the 30 minutes interval, and maybe even get confirmation from the 1 hour interval. And we see already in 1 hour interval how the price behaves when it reacts to this supply over here that we marked in the 15 minutes interval. Also, we have to keep in mind with the 4 hours interval over here, so we can still see that favorite position will be to take a short position from here, at least from here to here, and we'll wait and see what happened with this candle when it finish. If it passes it, and it passed this line over here that we marked, that what's correspond to the 4 hours candle that we marked previously, we can understand that there's still room to act even in this supply areas, although it's not recommended to take the long position over here. So this is a couple of positions that we are stationed today. Of course, the idea of the day is do not trade if you're not certain about what to do. And of course, if you are, you have to keep in mind, if you are in as a basic rule, when you are in a supply and demand areas, you don't going to go against the trend. Of course, your position will always be favorable about according to where the prices hits. If it's in supply, we're gonna short it or do nothing, or if we're in demand, we're gonna long it or do nothing, not going against the trend, and not where the areas, the possible areas for the price to be flipped, going against it. So this is the idea of how you can use future contracts to your benefit. Of course, there's a lot more to say about the subject we were going to expand about in our Discord community. Meanwhile, I want to wish you successful trading. And of course, as I said the previous days, today will be the last day of this week when I'm giving another additional 20 hours for 20 new traders that gonna DM text and make the comment, Ben, teach me. You will get a 1 hour free session with me, one-on-one guidance, and of course for you to expand your knowledge. So it's been offered for the only 20 traders who are going to do this action. So I'm welcome you guys to, of course, to review our channels and to connect to our Discord community. And meanwhile, I wish you successful trading, and I see you on the next market overview. Thank you for watching.